This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by HSS.
Our value principles are patient first, and we want to deliver the highest quality care.
The goal of creating and sustaining value is all about putting the patient at the center of the equation.
The purpose of this organization is to help people get back to what they need and love to do.
New year, new gains. The rally of 2016 sprints into 2017 with triple-digit gains. Tonight, how to protect your profits and still leave room for more.
Switching gears, Ford cancels plans to build a plant in Mexico as the president-elect threatens General Motors with a big border tax.
Fine-tuning your 401k. With pensions disappearing, there are things you can do to shore up your retirement savings. Those stories and more tonight on Nightly Business Report for Tuesday, January 3rd.
Good evening, everyone, and Happy New Year. The stock market got off on a good foot for 2017. Equities rose on this first major trading day of the new year. Early in the day, the Dow came within about 100 points of that yet-to-be-touched 20,000 level, flirting with it as it did for the past couple of weeks. But as oil prices slipped, so did stock prices. The blue chip index added 119. It closed at 19,881. NASDAQ was up 45, and the S&P 500 advanced 19, rising on the first trading day of a new year for the first time since 2013. But with the sharp and steep rise in the stock market over the past couple of months, many investors are wrestling with one big question. Will this be the year of the bull's big finale? Mike Santoli takes a look.
Stocks are showing new life as 2017 gets underway. The major U.S. indexes hit record highs starting in July after moving sideways for more than a year. And confidence has surged among investors and consumers after the election of a president promising business-friendly policies. While these upbeat trends seem to have some momentum, investors should probably view any further gains for stocks as a spirited latter phase of this bull market, not the start of a multi-year boom. While some are comparing this market moment to the dawn of the Reagan era in the early 1980s, when tax cuts and a new bull market helped revive American capitalism, the Trump administration will begin against a far different backdrop. The S&P 500 is up some 230% since March 2009. The index has had a positive return in each of the past 8 calendar years, one shy of the record 9-year streak from the 90s. Unemployment is already near historic lows, and while growth expectations are perking up, stocks now appear fully valued compared to corporate profits, even if earnings continue to rebound as expected. All this suggests to some market observers that any significant upside might have to come from a classic euphoria phase of this bull market, when the public embraces stocks with enthusiasm and drives indexes up toward an extreme. The upturn in confidence surveys and a rush of investor cash from bonds into stocks late last year are hints that such a trend might be underway. Of course, there's no science to pinpointing where we are in the market's life cycle. The economy might simply continue grinding slowly ahead and carry stock prices with them. Or perhaps inflation fears, a strong U.S. dollar, and possible trade tensions could unnerve world markets and derail that confidence trade. However things turn out, it's probably best not to expect several more years of smooth gains for stocks, which, after all, have been doing quite well even as the public debate has focused on the economy's weak spots. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.
So with the rally continuing into the new year, how do you protect the gains that you've seen in your portfolio? Peter Maluk is president and chief investment officer of the wealth management firm Creative Planning, and he joins us now to talk about that. Welcome back, Peter. Nice to see you again.
It's great to be with you again.
What is the best strategy? It's a new year, but not necessarily a new market.
Right. I like to look at the markets and look at your personal portfolio from an opportunistic rebalancing perspective, which basically means instead of trying to guess when the U.S. is going to stop running this strong and when international is going to turn, when the portfolio gets out of whack, you rebalance right then. You don't wait for the end of the year. You don't wait for an end of a quarter. You take advantage of it right away. If you look at last year, that meant you were doing it in February. You were buying energy. You were buying small cap stocks. You were buying international stocks. U.S. had been doing better. Those were very weak. And if you did that, you were greatly rewarded. And you will always be rewarded over time. And if you're doing that right now, you're starting to look at maybe taking some of your U.S. profits and looking overseas a little bit.
So buy stuff that is not participated quite as much as other sectors. You know, Peter, I hear an awful lot of commentators these days sort of saying, hey, the market could continue to run here another 10%, another 15%, but whatever, because we're going to have the prospect of lower taxes, less regulation, maybe some more infrastructure spending. When everybody starts to say and think the same thing, that's when I start to worry. What are the possibilities that something might get in the way of this sort of clear sailing path?
Well, I think if you look at the market's valuation from where interest rates are, from where unemployment is, interest rates still near all-time lows, unemployment near all-time lows, the market's fairly valued. And if you look at all the things you talked about, pulling back on regulations, lowering corporate taxes, repatriation of assets, those drop to the bottom line for these companies. So it's not really hypothetical that these companies are going to make more money in this kind of environment. The question becomes, will we see more growth? And with the low unemployment, even regardless of all of the things Trump is talking about, when you have unemployment drop below 5, you start to see wage inflation, which starts to drive more growth.
Now, you gave us a couple of ETFs that you think might allow people who want to rebalance their portfolio some diversity.
Yes, I like VEA, which is developed markets internationally, and IEMG, which is emerging markets. And at Creative Planning, we believe in being globally diversified all the time. But when you look at the discrepancy that's happened between international stocks and U.S. stocks over the last 3 years, that sort of discrepancy has never been sustained. We never know when it's going to change. When's one going to start outgunning the other? Is today indicative of how the year is going to go? Nobody knows that. But this sustained gap of performance is not sustainable. So if you've got patience and you're looking for value, well, there's plenty of value overseas. To the extent you think the U.S. is fully valued, fairly valued, and I do, at Creative Planning we do, you can look at globally and see a lot of value on the table.
Excellent. Peter, thank you for those suggestions. We appreciate it. Peter
Thanks for having
Maluk
me.
with Creative Planning.
The president-elect today targeted another American icon, General Motors. He did this just hours before finding out Ford canceled plans to build a small car plant in Mexico. As a candidate, Donald Trump vowed to stop Ford from building that very plant. Now, just weeks from becoming president, Mr. Trump is pushing even harder to change how automakers look at building their vehicles south of the border. Phil LeBeau has the details.
After months of repeatedly saying Ford would not change plans to move small car production to a new plant in Mexico, Ford CEO Mark Fields switched gears, calling President-elect Donald Trump to say Ford is not expanding south of the border, but rather in the U.S.
Well, we informed President-elect Trump and also Vice President-elect Pence this morning that we were going to be investing $700 million here in our plant in Flat Rock, Michigan, adding 700 jobs on top of the 28,000 jobs that we've created over the past 5 years.
Ford says it's not adding a Mexico plant because demand for small cars is slowing down. Perhaps, but this is clearly a victory for Donald Trump. While running for president, he hammered automakers for building vehicles in Mexico and importing them tax-free to be sold in the U.S., a message he's still pounding, this time with GM, tweeting, General Motors is sending Mexican-made model of Chevy Cruze to U.S. car dealers tax-free across border. Make in USA or pay big border tax. GM responded saying all Chevrolet Cruze sedans sold in the U.S. are built in GM's assembly plant in Lordstown, Ohio. GM builds the Chevrolet Cruze hatchback for global markets in Mexico, with a small number sold in the U.S. Approximately 4,500 of those hatchbacks sold last year here in the States. So not a huge part of the more than 400,000 vehicles GM imported to the U.S. from Mexico last year. But in Lordstown, Ohio, where the automaker is laying off 2,000 workers because of slowing demand for the Cruze, Trump's message plays well. In fact, Spritzer Chevrolet in Lordstown refuses to sell Cruze models built in Mexico.
Well, we said, well, we're not keeping them on the lot, and we're sending them out of the area. We want to support our plant and the guys and girls that are up there. Third shift, it's kind of sad what's happening, so we'd like to keep them here.
The big question remains whether Mexico's soaring auto production, which will top 4 million this year, will eventually lead to a tax being slapped on those models sold in the U.S. If that happens, how much will those increased costs hurt demand and the bottom line of automakers who are increasingly taking a second look at their operations south of the border? Phil LeBeau, Nightly Business Report, Chicago.
One stock that fell after Ford's announcement was Kansas City Southern. The automaker's Mexican plant was supposed to have been built along Kansas City Southern's railway lines. The railroad received nearly half of its revenue from its Mexican operations during the first 9 months of 2016.
The president-elect tapped a new trade ambassador. Robert Lighthizer is former Reagan administration official. Donald Trump says that he has repeatedly fought to prevent bad deals from hurting Americans. Lighthizer is a critic of China's trade practices and says he's fully committed to leveling the playing field for American workers.
The president-elect also tweeted his pledge to dismantle the Affordable Care Act, saying, quote, "It just doesn't work." This as the House and Senate convened today for the start of the 115th Congress, which saw Paul Ryan easily reelected as House Speaker. John Harwood is outside Trump Tower in New York City with more on the congressional agenda. John, Congress has an aggressive to-do list, beginning with the repeal of Obamacare. I assume that remains the top priority. Did they put in a bill to do it today?
Yes, they started the process in motion. They passed language for the process that is an expedited process that means they can repeal big parts of Obamacare with only a majority vote. Does not make it vulnerable to a filibuster by Democrats. That process is going to take a few weeks. It'll go through the end of January, but Republicans are on track for what they're calling a repeal and delay strategy to have a phase-in period for some replacement. The question is whether they ever come up with one or whether they just keep putting it off.
Yeah. On the environmental side of things, can we expect to see the reversal of some of the environmental regulations, and on what kind of a timetable?
No question about it. There are a couple of regulatory bills, rollbacks, that Republicans are passing. Donald Trump's vowed to have a policy that repeals 2 regulations for every new one that is passed, and regulations like the president's Clean Power Plan, which is now subject to legal challenge, holding up its implementation. That is something that Republicans and the executive branch are going to take a different attitude on, of course, once Donald Trump becomes president.
All right, John, thank you very much. I have to leave it there. John Harwood in a rainy New York City tonight.
Indeed. Still ahead, preparing for retirement. If that's one of your New Year's resolutions, there are some things you may want to do to maximize your 401k.
Finland is launching a 2-year income experiment. The country is providing 2,000 unemployed citizens with a monthly income of roughly $580 US. Now, those receiving the money will continue to do so even after they find work. The government hopes the experiment will cut government red tape, reduce poverty, and lower unemployment in that country, which stands now at more than 8%.
Tesla misses its delivery goal for 2016, and that's where we begin tonight's Market Focus. The automaker delivered just over 76,000 vehicles last year, missing its target of 80,000. The company noted that more than 2,500 cars in the fourth quarter were not counted as delivered because the vehicle did not make it to the customer in time. Tesla shares initially fell in after-hours trading following the news, but ended the regular session up 1.5% to $216.99. Xerox has officially split into 2 publicly traded companies. Over the weekend, the printer and copier maker spun off its business services division called Conduent. That company debuted on the New York Stock Exchange today, opening at $14.90. Separately, JP Morgan and Credit Suisse upgraded Xerox's stock. So shares of Xerox soared almost 20% to $6.89, while Conduent shares fell nearly 8% to $13.72. Chipmaker Intel said that it will buy a 15% stake in the German digital mapping company called HERE. Intel said it also entered into an agreement with HERE, where the two companies will research and develop technology for autonomous driving. Shares of Intel rose almost 1% to $36.60.
The molecular diagnostic test maker Interpace Diagnostics said it has signed an agreement with Blue Cross Blue Shield. Under the deal, Interpace will work with one of the insurer's programs to help it develop the best ways to secure ongoing coverage for its products and tests in the pipeline. Shares of Interpace skyrocketed 70% to $7.50. Shares of the pharmaceutical company Depomed surged today following a report over the weekend that said the company will sell itself, and it is accepting final bids tomorrow. According to the New York Post, the private equity firm KKR is among the potential suitors. Depomed surged nearly 13% today to $20.34.
Early champions of the 401k are having some regrets, reportedly, about the investment revolution that they started. According to the Wall Street Journal, many of the backers say the 401k has fallen short of expectations and was never meant to replace pensions. But it has, so how do you make the most of it and improve your retirement savings? Tim Maurer, Director of Personal Finance at BAM Alliance, joins us now to talk about that. Happy New Year. Good to see you.
And to you.
Tim, what do you make, first of all, about the article and whether or not those claims, do they resonate with you? And then how can we really help ourselves improve our 401k performance?
Well, in many ways, they do resonate with me because anyone who is in the financial space, as I am, spending all of my time working with clients on many times their retirement objectives, I do see how the 401k has been underutilized. I absolutely see how companies in many cases have abdicated the role that they were playing in retirement for their employees' lives through pension plans by eliminating pension plans and just pointing people in the direction of a 401k. And I absolutely see the institutional challenges with big companies filling plans with bad investments that have high expenses. But at the same time, this is the option that we have on the table today. And if you utilize a 401k correctly, if you know how to hack it a little bit from the institutional problems that it has, you absolutely can make the most of it for yourself and your family.
When you say hack it, what are you talking about there? Making the right investment choices within the panoply of choices that you have, or what?
Well, that certainly is part of it, Tyler. And one of the reasons the choices are a problem is because most 401k plans are run by these big financial firms that fill them up with their own high-expense investments. But you can often find index-type funds inside of your plan where that's what I'm referring to with the hacking. You may have to look between the lines in order to find the best options. It should be easier, and hopefully it will be going into the future, but you still can absolutely make the most of it.
You say there are three things that individuals should be doing to maximize their 401k contributions. Tell us about that.
Well, the first one is contribute. No matter how many times we want to complain about the options that are available, no matter how many times we want to be concerned with market volatility and the challenges that we all have in investing throughout our lifetimes, the number one predictor of financial success in retirement is the degree to which you apply yourself and your funds that you save. So let's not see this news about 401ks that can be a little dreary and use it as a reason to abdicate our role in saving for the future. Number two, we absolutely have to do our best to allocate the funds inside. And that's where we get to Tyler's point about hacking what might be a mediocre plan. I'm hopeful that we're going to see improvement there, especially with the new Department of Labor ruling requiring financial advisors to be fiduciaries this coming April. But lastly, you also want to maximize whatever fixed income opportunities that you have. For most of us, that's still going to be Social Security as the primary. And as we continue to age in the future, I am encouraging retirees to stave off taking their Social Security benefit until as late as possible, because then you'll see your Social Security income go up and you'll reduce the reliance on your 401k in retirement.
And on that note, we have to leave it there, Tim. Thank you. Tim Maurer with BAM Alliance.
Coming up, why some in Silicon Valley are giving new meaning to the term pet rock.
Here's what to watch for tomorrow. The Fed releases the minutes of its last meeting when it voted to raise interest rates. There will be two competing meetings on Obamacare on Capitol Hill, one with President Obama and the other with Vice President-elect Pence. And the world's largest automakers release their sales numbers for December, potentially setting a record for the year. That's what to watch for on Wednesday.
The space industry could enter a new phase this year after a number of stumbles. SpaceX plans to resume rocket launches shortly, and there's a lot of money on the line as private companies shoot for the stars. Morgan Brennan has more.
Space Exploration Technologies says its rockets are ready for blastoff. The privately held company is targeting a return to flight this Sunday, 4 months after a Falcon 9 rocket erupted on the Cape Canaveral launch pad, destroying a commercial satellite and halting an aggressive launch schedule. After an intensive investigation, SpaceX determined the explosion was triggered by the failure of a helium vessel used to help pressurize a liquid oxygen fuel tank. The anomaly initially stumped founder and CEO Elon Musk, who called it the, quote, toughest puzzle we've ever had to solve in a CNBC phone interview back in November.
I think we've gotten to the bottom of the problem. A really surprising problem that's never been encountered before in the history of rocketry. And it basically involves a combination of liquid helium, advanced carbon fiber composites, and solid oxygen. Oxygen so cold that it actually enters solid phase.
SpaceX says it's taking, quote, corrective actions to address, quote, all credible causes of the explosion, including, long-term, some design changes. But to launch, the upstart must first get the green light from regulators, a process likely to happen if tests this week go according to plan. Experts say it's crucial that the company is successful.
What SpaceX is doing with this launch is another step in exercising commercial entities to take over the role that has been done by the government in the past so that we can do it more efficiently and then focus our government resources on the next stage of exploration.
Like deep space. The upcoming launch would put 10 Iridium satellites into orbit, the first of 7 such trips to replace an aging constellation that will be in part used to help track aircraft. Shares of Iridium soared on the news. SpaceX has a $10 billion backlog of launch contracts, and September's explosion already cost the company at least one order. It also has deals with the Pentagon and NASA, including to shuttle cargo and, starting next year, astronauts to the International Space Station. And beyond that, the company's own plan to go to Mars. But it all comes down to this week and whether SpaceX can finally get back into space. For Nightly Business Report, I'm Morgan Brennan.
So what is it about billionaires and space? From Elon Musk to Amazon's Jeff Bezos, Virgin's Richard Branson, and Microsoft's co-founder Paul Allen all have entered the race for civilian space travel. But there's another space race playing out in Silicon Valley. Josh Lipton has our story from San Francisco.
Steve Jurvetson knows he might never get to travel to Mars. But that doesn't mean the respected venture capitalist can't bring a piece of Mars home. He's converted his office in Menlo Park, California, into a private space museum. It's filled with treasures, including the second largest Mars rock in private hands. Jurvetson won't say how much he paid for the rock, only that it cost more than his first home. To find such space rocks, Jurvetson turns to professional meteorite hunters like Michael Farmer. Since the late 1990s, he's traveled to some 80 countries searching for these rocks, which he then sells to private collectors, including tech heavyweights like Jurvetson.
The Silicon Valley guys have been pretty good the last couple of years. They buy a bit different than the Chinese. The Chinese want large irons, large things, you know, kind of to put in office lobbies and things like that. Whereas the tech guys, they want rare things, very, very special things.
Farmer, along with his friend and business partner Greg Hupe, recently returned from Bolivia, where they bought several meteorites from Quechua people, a local indigenous community. The rocks were some 4 billion years old, and within 24 hours, they flipped them for $60,000. This work is not for the faint of heart. In 2011, Farmer was kidnapped, beaten, and nearly killed by Kenyan thieves. In that same year, he was charged with illegal mining in Oman and imprisoned for 2 months. Greg Hoope also counts tech entrepreneurs as his clients, seen here with Naveen Jain, who is the founder of startup Moon Express, a commercial space company. Hoope sold Jain 2 slices of lunar meteorite, each weighing roughly 1 pound and about the size of a large dinner plate. Each slice of this rock cost hundreds of thousands of dollars. The market for meteorites extends well beyond just tech power brokers. Last April, Christie's held an auction for these rocks, and sales totaled some $700,000. Collectors don't necessarily think of these space rocks as sound investments. Instead, Jurvetson says he buys meteorites because of the unique, rare story that each ancient rock reveals. For Nightly Business Report, I'm Josh Lipton, San Francisco.
You just never know, do you?
never know.
You never know. That does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll see you back here tomorrow.
Nightly Business Report has been funded in part by HSS.
Our value principles are patient first, and we want to deliver the highest quality care.
The goal of creating and sustaining value is all about putting the patient at the center of the equation.
The purpose of this organization is to help people get back to what they need and love to do